Hello, my name is Aaron Edwards, co-founder and market consultant of Santos Springs. We offer grain marketing solutions to producers in multiple countries. Welcome to our W2H grain marketing channel. Go ahead and hit the subscribe button. I also recommend tapping the bell so you get future notifications. And if you like what you see, hit the like and share this video with other farmers who care deeply about their grain marketing. If you are a corn or soybean farmer, your revenue depends not only on your production, but also the answer to three simple questions: when, how much, and how you sell. One W, when, two H's, how and how much. Our W2H mentorship provides a clear, concise, and custom approach to answering each one of these three questions for your specific farm throughout the year. Before we start this week's content, it's always important to remember that trading in futures products entails significant risk of loss, which must be understood prior to trading and may not be appropriate for all investors. This commentary and the information contained within should be considered market commentary and reflect the opinions of the author. For those of you watching this with a delay, if you are a U.S. corn or soybean farmer and want to stop being held hostage by market uncertainty, let us teach you how to place each one of your bushels in a grain marketing strategy specifically designed to optimize your farm's revenue. Click on the link and we'll work together to see if our W2H mentorship is the right next step for your grain marketing. This is Aaron Edwards with Santos Springs. It is April 29th, 2025. We have had a couple of very productive weeks with planting, so I'm guessing a lot of you will be watching this video from a tractor or a truck or just out in the field one way or another. But all the same, we're going to start with the recommendations and keeping it simple. Again this week, just like last week, no action recommended. The market really has not changed very much. Now, we don't want to be, distracted thinking that it won't change. The market can change on a dime, but the last 2 weeks we've had very similar narratives, and we're basically bases loaded, ready for a spring rally if we get one, and the calendar hasn't told us to deviate from that strategy. So I want to walk through the corn market, walk through the bean market, kind of fast, but in a very deliberate way. Before we do that, we're going to take a quick look at the dollar index, because this is interesting, as well as just kind of our that pyramid that we always start off the videos with. So let's jump into it. Got a lot of things to cover today, but I'm excited. I'm looking forward to it. There's some interesting things. The first thing I wanted to point out is that the dollar index, we're down here at the lowest levels since 2022. So we've had back during COVID, we had lower levels, quite a bit lower, got down to about 90. Right now we're hovering under 100, but for that dollar index to be under 100, that's over the last several years we've not really been there. So you'd have to go back to 2022 to get there. Also, I think it's just important to point out, and this is, I'm not making a political commentary about what's right, what's wrong. This is simply living in the world the way it is. I think so far one of the actual differences that we've seen from the trade wars, besides a lot of hype and a lot of headlines, is just simply that drop in the dollar index, right? We've gone from 110 to under 100. That's 10, 11 point drop in the dollar index. Is a weak, what's the strategy? Should we have a weak dollar? Should we have a strong dollar? That the strategy of what's best for the US is way above my pay grade. What I would say that is interesting, though, is that a weaker dollar would tend to help exports, which for corn and soybean producers, that's typically good news from a demand standpoint. So we're going to talk a little bit more about demand in just a minute. But we always want to start out with this, just the philosophy of doing business. So for those of you who watch this every week and have been with us a long time, okay, the philosophy is the same. We want to ingrain, we build a portfolio. Based on that portfolio, that guarantees that when there are market opportunities, they are matched to a cohesive plan for your farm. So we build that portfolio. And then we look at seasonals, technicals, the position of the funds, kind of the usual suspects that help us understand what's going on the market. And then on top of that, action is taken. So that's the three-pronged philosophy that allows us to be successful. Now we're going to go through corn and beans, then we'll summarize markets and go from there. Okay, the way we're going to look at this, there's a lot of information to cover, but I want to tell this story in kind of a systematic way so it doesn't seem like a bunch of scattered information. So we're going to go soybeans, then we're going to go corn. And I kind of want to paint a picture in a systematic way so that we can get a bit of a holistic view of the soybean market and then of the corn market, because there's just a lot of moving parts. There's a lot going on right now. The first thing, congratulations to all of you who are getting good field work done. We are 18% planted nationally on soybeans. That is 6 percentage points above the 12-year average. That's 1 percentage point faster than last year, which was already a fast pace of planting. I have a theory, and I'd appreciate comments on this. You can email me or just drop comments in the video, okay? I believe that over time, we have seen farmers accept that, the more traditional way of plant corn first and then plant beans because it's a shorter cycle is giving way to farmers saying, hey, I want my beans early because I get good yields out of early beans. And I think that part of this fast bean planting is just farmers choosing to hitch up their soybean planter sooner than they have in the past. My bias or my thought is that this is in part just an adjustment to best practices of planting beans a little earlier. But it's been a few years since I've been farming, so the experts on what I just now said, that's you. So I mean, what have you seen in your county? Does that hold true? Have you seen people getting out, or maybe it's your operation or your neighbors where they're just saying, hey, I used to not be in such a rush to get my beans in, but I've seen benefits and I'm leaning heavier on getting early beans in, or planting beans fast right out of the chute. Because if that is the case, this whole narrative of fast beans planting, if best practices is to plant beans faster, and I'm not saying it is, like I said, this is a question for you, right? But if best practices is to plant beans faster, then it'll be a number of years as that adjusts across the corn belt. And then we got to give it 5 years for that average to calibrate. So I always, whenever they say bean planting is fast, I always take that with a little bit of grain of salt for that reason. But this is a point where I would love to get your feedback on. You guys are the ones getting the crop out and making those decisions. A couple of states to highlight. Just the number one and number two are Illinois and Iowa in terms of volume. And they are doing very well. They're actually higher percentage planted than the national average. And they actually, while, we on average, the country planted 10%, over the last week, Iowa was at 14% week over week, and Illinois was at 12% increase week over week. So planting's going well.
Which brings us to this really good question. Oh no, good news in the field. Is this bad news in the bean market? This is the new crop beans. And there's kind of that feeling last time that really since 2023, every time that we've gotten to this 200-day moving average, we have failed. And that's been another excuse for a bearish move down. Is that going to happen again this time? And the truth of the matter is we don't have a crystal ball. We don't know how that chart gets filled in. That is a possibility, and we're talking about it. But here's where we come in and we say, let's look at the symptoms of the market. So yeah, we do have that 200-day moving average pressuring us down, and we have good planting news coming out of the chute. But let's look at the symptoms of this market. I've said this before, but I'll say it again. The adage is cash spreads futures. If you have actual strong demand, if you have buyers wanting grain, the first thing you'll see is strength in the cash markets. The second thing you'll see is spreads, which is the old crop gains faster than the new crop. And then the last thing you see is the actual rally. So let's just look at that. Let's put that to the test. Basis by definition is location specific. Just to pick a spot, I pick Tippecanoe County, home of Purdue. They put together this basis tool, which I like a lot, and it's also my alma mater. But that's just to have an example. We have seen, look at how we have seen, well, this is the soybean basis, but just look at what we've seen happen to the soybean basis over basically ever since we've been trading, ever since May has been the nearby. But it's just, this is not seasonally different than most years. But I also want to point out that this average that we're looking at, these were the averages, 23, 24. These were the averages of that real strong bull market when we, hey, there's not enough beans in the world. So in all fairness, I'm not saying, hey, you were going to have $14 beans again. But it's hard for me to look at this chart and not say we have a strong and strengthening cash market. Strong and strengthening cash market. And I'm showing you this chart, but I looked multiple locations over multiple states. The actual levels change. Some are ahead of the historic average basis, some are below. But it's not like we're saying there is no demand for beans. That is not the story. We have seen steadily improving basis, which says cash markets are healthy. Remember, cash spreads futures. So let's look at spreads. Scroll and let's look at spreads. So this is the July contract minus the November contract. Old crop minus new crop. What are we seeing? We're seeing that spread. It came down to catch its breath here recently. So we had the last time we tested the 200-day moving average, that was what happened to the spread. And then when it fell down, when we lost the spread off that high and it came to the 20-day moving average, it tried to get up, but then it just took that nosedive. That's what the spread did. So far, we didn't make it all the way up this time. We came down and we're rebounding pretty well. So cash markets, strong and strengthening. Spread for being strong and strengthening. How bullish can we be? Well, let's keep putting together this story. Speculators, this is speculative money in Chicago. They actually increased their long position. So speculators are buying. So demand is strong. Speculators are buying. We don't know what will happen to prices, but the question that we had on the November contract was, is this going to just be a head fake and this market's going to fall apart, which could happen? Or are we finally going to get that? If you've been watching this, you know that we've been waiting for this golden cross. We were all hopeful for it back in here. It didn't happen. Are we finally going to get that golden cross? And if we do, then we get a friendly rally. And if we get an old crop rally, it's hard to think that the new crop's going to lag too far behind. So in all fairness, if we're going to have planting paces that are 6 percentage points ahead of the historic average and 1% ahead of last year. If that's going to be the headline that breaks the next several weeks, and then conditions are great and perfect, there might come a time where the calendar just says, hey, this is too much good news. Soybean crop is guaranteed, and there's no more potential for rally. I don't think that headline is April, right? We still have to plant most of the soybean crop, and planting a crop and having a crop, you all know as well as I do that those are not the same thing. Just because you plant a crop well doesn't mean you're guaranteed to have a good crop. That's a big part of the battle. So we're early enough in the calendar, and the symptoms are bullish enough for me to just say, okay, let's wait and see one more week, because there's the potential that this is friendly and pretty friendly, right? If we get these symptoms moving in our favor, we get a hiccup, we get a little something, a little dryness in the forecast, or a little delay to the rest of the planting, or there's any number of things that could happen that could help nudge us in the right direction. And if it tips the scales, we get speculators excited. That's when we can get some rallies. Now we're going to basically tell the same exact story on corn, or the same sequence, and you'll see that it's a very similar story, but we've grown accustomed over the last several months to having a ultimately kind of subdued or bearish story on beans and a friendlier story on corn, and that's this chapter is a little friendlier beans than corn, but let's look through it. First of all, just an update on planting. Corn planting is 24% done. That is 2 percentage points ahead of the historic average. That is 1 percentage point behind last year. Last year was a fast year, as we mentioned with the beans. Let's highlight a couple of states here. So first of all, Illinois. Oh, let me get a highlighter. Illinois, 16% planted. I think what is real nice and surprising is Iowa's 34% planted. Average for Iowa would be 28%. So Iowa's just really clipping away there at the planting. And several states have made really good progress. Kansas is 10 percentage points ahead of historic average. I mean, for the average to be better than for the current planting pace to be better than the average, that means many states are clipping along pretty well and pretty fast on their planting, and that's certainly the case. And again, this is actually, now we're going to look at new crop corn. Oh no, record corn acreage. Good news on planting. How concerned should we be about this new crop corn? So just to go back a little bit past recommendations, right? We did start layering in sales here. Maybe it was about where it was. Maybe it was a little more like that. So we do have a stake in the ground on sales on new crop. We're 20% priced. How concerned should we be about this? And I must admit that I am a little more concerned about new crop corn than I am about the bean market short term. But let's just go through the same activity, right? Let's do cash, spreads, futures, and let's say how concerned should we actually be about this. And again, I picked Home of Purdue. They put out the basis tool. We'll give them that nod there. But the story is similar across different markets. The levels obviously vary. Really, over the last 8 to 10 weeks, we've basically across the board seen basis strengthening. So there is strong and strengthening demand for cash corn. That's good news. Not necessarily surprising from a standpoint that seasonally it's in line with what we usually see at this point in time. But we've had corn. We got a corn rally, but corn hasn't been astronomically high, and then we've just seen that basis ticking up. So cash markets strong for corn. Let's look at spreads. Oh my, that chart looks an awful lot like the bean market, where we're not quite up to those spread levels that we had back when we had the $5 corn. And then after that, they fell down and then they came up. Once they got back up, then we've got this first run up, and then they had to come catch their breath, but they bounced on the right there at the support, and they're heading back up. So cash market's strong, spreads are strong. I wonder what the speculators are doing. Are they buying or selling this thing? How concerned are they about the record acreage and the fact that planting's going well? Well, they didn't increase their position like they did in beans, but they only reduced it about 1 million metric tons. I'm just going to call that just they're maintaining their position. I mean, just shuffling positions around. That's not a significant strategic shift in my view. So they're at least hanging on to their longs, or practically all of them, right? Cash market's strong. Spreads are strong. What can we expect from the futures? Let's look at July. Let's look at old crop. We don't know. Maybe we're going to see out of the old crop exactly what happened to the new crop, which is if it's going to imitate the new crop, we're going to have to see it come down here. But if it's going to take the path of the spread, then we've found support here, and it's going to go back up. There is enough calendar ahead of us. There's enough unknown ahead of us to where, in my opinion, just one more week of information is going to give us, better decision making. And I think that there's a decent shot that next week we're bouncing back up at the highs that we put at these recent highs, and old crops either at or knocking on $5 would not surprise me. Maybe not next week, but if we find support here, I'm guessing July corn goes back up to $5 or over $5. That's kind of what I'm expecting. So it's at least enough information for us to just kick the can down the road and say, there's enough unknown ahead of me. There's friendly enough symptoms to where I don't need to panic and do anything. Now, let's see what one more week of information brings. And as long as that's friendly, I mean, we'll keep our eye on it. But that if we get a rally in old crop, chances are that new crop is going to find its support, and then it's going to turn a corner and head up. So I don't want to get overly bullish, but I'm usually pretty bullish in April because we still have so much unknown information ahead of us. And especially if we're not really seeing those real lofty prices, it's a little easier to be bullish. So in a nutshell, that's where we're at. And let's just wrap it all up, bring it all together by summarizing it, and I'll let you guys get back to full focus on planting. Good job, by the way. Grateful, very grateful for what you do, making sure year in and year out that we get a good crop. I said this, I don't know, last week or a couple weeks ago. If the U.S. doesn't produce a good crop every single year, the world becomes a pretty messy place. So I know there's a ton of headlines, but thank you for raising a good crop. Thank you for getting out there and checking soil conditions and just doing best practices, because the world is a whole lot better place when the U.S. has a good crop. So thanks for making that happen. Everyone should be grateful to farmers, but I want to make sure that you know that I am for sure. All right, seasonally, and it's a sell in the corn market. It's planting. We're going to be seasonally in a sell. It's a sell in the bean market. Managed money is long in corn, but not enough to justify selling. They're long in beans, but not enough to justify selling. Corn, old crop corn's trying to stay in an uptrend. New crop corn is in below the 20-day mover. It's in a downtrend. What I'm going to do here, I'm just going to say that the trend on corn is neutral. Because we'd have to go contract by contract. Some are in uptrends or barely uptrends. Some of them are in downtrends. I'm going to say the trend is neutral. And the trend on beans is in an uptrend. That's the good news there. Let's get the mic working. There we go. Corn and soybeans have a strong cash market. We have seen strong demand in the U.S. by way of improving basis. And we have also seen strong demand for corn and soybeans in other countries. Soybeans are approaching what may be a golden cross and very friendly technical move. But last time beans faced this resistance, markets failed and beans moved lower. New crop corn was not able to stay in an uptrend, but spreads in old crop are staying at or above the 20-day moving average so far. In a nutshell, no actions recommended. Symptoms of the market are still friendly or bullish. Planting's going well, and that's putting a damper on any rally. But take a deep breath, make sure the field work's getting done, and we will keep a close eye on markets and reach out if anything needs to be done. But personally, I think we just kick the can down the road and reevaluate next week as far as what actions are needed. Hope you have a great rest of your day, great rest of your week. Be safe, get the crops in, and we'll be in touch.